Hello everyone, welcome to my YouTube channel Market Buzz. In this channel, we'll talk about the current market scenario in terms of stocks, cryptocurrency, and real estate. I'll provide you with the latest updates, and if you feel the amount of information is good, then do like, comment, and subscribe to my channel. Without further ado, let's dive into it. First of all, we are going to talk about stock market and the amount of liquidity pumping into it. The article shows that the retail investors power the trading wave with record cash inflows. Individual investors plowed a record net $27.9 billion into the US stock market in June, lured by continued volatility beneath the market surface. Retail investors keep pouring money into markets even as many of their favorite meme stocks and cryptocurrencies have languished. In June, the so-called retail investors bought nearly 28 billion worth of stocks and ETFs on a net basis, according to data from Vanda Research's Vanda Track, the highest monthly amount deployed since at least 2014. That even trumped the amount retail investors spent in January during the first meme stock frenzy. The activity underscores the enduring influence of ordinary investors in market. When the COVID-19 pandemic ushered in a wave of first-time investors, many market observers suspected these investors would retreat when the economy reopened. Instead, individual investors have grown in number. More than 10 million new brokerage accounts are estimated to have been opened in the first half of this year, according to JPM Securities. This is around the total for all of 2020. Retail investors' enthusiasm is in contrast to professional money managers' growing unease about the market's outlook. This has risen as market on the surface appear placid, but volatility has grown around individual stocks. This week, traders will parse the latest minutes from the Federal Reserve, wherein there is a FOMC meeting in June, due Wednesday, looking for clues about when the central bank could begin raising rates. Volatility is likely to be an ongoing issue since overall trading volumes tend to be lighter in the summer months. Many retail investors remain sanguine about any potential market pullback, even as some of their favorite trades have recently faltered. Shares of AMC Entertainment Holdings have fallen 28% from an intraday high reaching in early June. Dogecoin, a favorite cryptocurrency among individual investors, is down about 67% from its May records as of Friday afternoon. Meanwhile, GameStop, perhaps the most famous meme stock, has stalled around $200 after soaring to $483 earlier this year. Individual traders appear still willing to employ a buy the dip strategy. On June 18th, for example, a retail investors bought more than 2 billion worth of stocks on a net basis, beating every other day in at least the last 2 years, based on VanderTrack, as the three major US stock indexes pull back almost 1% or more. People are still very optimistic, said Jason Gopfert, president of Sundial Capital Research, which tracks how sentiment varies between individual traders and institutional investors. His gauge of retail traders' sentiment currently shows that the group is nearly 70% confident that US stocks will keep rising over the next 3 months. Meanwhile, professional traders are only about 44% confident that stocks will rally during this period. So you need to understand that there is a lot of frenzy in the market, there is a lot of confusion, and this is purely driven by the retail investors and their bullish trend. Now, the second, we are going to talk about the ransomware is the IRS of Bitcoin. Does really matter how inconvenient it is to pay in Bitcoin when you don't have any other choice? Ransomware is to Bitcoin as the IRS is to the dollar. Just as the taxman forces you to use dollars to pay your tax, electronic ransom demands have been set in Bitcoin, forcing companies, individuals, and even some governments to use the cryptocurrency if they wish to regain control over their computer systems. If this sounds wacky, bear with me. Before getting into the full explanation, we need a brief tour of the theory of money. The most widely accepted is that money was created because of early humans found it inconvenient to barter with pigs, llamas, or berries. It would be much easier to swap the llamas for a wider accepted items and then to swap those items again for grain or other things. The first of this theory focuses on money as a means of exchange, an area where Bitcoin has floundered because of the cost and hassle required to actually buy something in Bitcoin. Only when its anonymity and international nature helped enough to offset these disadvantages, such as in evading money laundering tax laws, taxes, and capital controls, is it much used. The rest of the Bitcoin trading is speculation and exchange arbitrage. The second theory focuses on money's role as a unit of account, an area where Bitcoin hasn't had any success so far. Even in El Salvador, where Bitcoin is being made a legal tender, stuff will still be priced first in US dollar, then translated into Bitcoin for anyone paying in crypto. A third theory is increasingly popular thanks to the modern monetary theory and puts the IRS front and center. One of the founding principles of MMT is chartalism, the idea that money has value because we have to pay taxes on it. The government issues paper and because it demands that we return certain amount of that cryptocurrency every year, have to acquire it. Put another way, fiat dollars are backed by the IRS, which has men and women with guns at its disposal. Cryptocurrency buyers often cite the free spending of MMTers on the left of the Democratic Party as a reason to dump dollars, but the theory also supports the idea that Bitcoin is backed by ransomware. Think of the ransomware that encodes your hard drive and demands payment in Bitcoin as the crypto version of the tax demand and the IRS enforcement wrapped up together. If enough people have to go out and buy Bitcoin to pay ransoms, others will produce and hold it ready to sell because there is steady demand. If you have it anyway, ready to supply for ransom or for taxes, you might choose to use it for other things just as people do with dollars. It isn't obviously the case that enough people think Bitcoin is a store of value, though some hodlers in for the long term clearly do. Quite apart from its insane swings in price, it is full of people trading in an attempt to become very rich very quickly. That is quite different from buying it as a way to protect one's wealth if everything goes wrong, which is usually justification for investing in gold. Maybe we need to add a new section to the theory of money, store of volatility. Think of Bitcoin as a gambling token as it makes perfect sense. The appeal to get rich quick. Merchants and scam artists could provide a reliable source of buyers to support the price. Get enough people in, and perhaps enough people will want to spend their winnings to support its use of money. Of course, the IRS will want its share of profits, whatever they are denominated in. Now, the latest news that we have seen is that the US IPO market a danger zone for Chinese firms after Beijing crackdown. China's stepped up scrutiny of overseas listings by its companies and a clampdown on ride-hailing giant Didi Global soon after its debut in New York have darkened the outlook for listing in the United States, bankers and investors said. On Tuesday, Beijing said it would strengthen supervision of all Chinese firms listed offshore and tighten rules for cross-border data flows, a sweeping regulatory shift that is also set to weigh on the long-term valuation of the IPO-bound companies, they said. Bankers and investors expect the pace of activity to slow in the near term as investors grapple with Beijing's decision to tighten supervision of firms listed offshore, coming just days after regulators stunned investors by launching a cybersecurity investigation into Didi. It suffices to say these Chinese companies already plan to list in the US will have to pause or even abandon plans altogether in the face of mounting uncertainties and confusion, said Fred Hu, chairman of Primavera Capital Group. The US market is off limits, at least for now, said Hu, whose private equity firm's portfolio include a number of tech companies that have gone public overseas. The stakes are extraordinarily high for both the tech companies and for China as a country. US capital markets have become lucrative source of funding for Chinese firms in the past decade, especially for technology companies looking to benchmark their valuation against listed peers there and tap an abundant liquidity pool. A record $12.5 billion has been raised so far in 2021 in 34 offerings from listing of Chinese firms in the US. Refinitiv data shows, well up from $1.9 billion worth of new listings in 14 deals in a year ago period. Analysts say China moves to look more closely at firms venturing overseas add a new layer of uncertainty for firms already struggling to navigate escalating tensions between Beijing and Washington over a broad range of issues. The message is that for successful overseas listing, Chinese regulators must be involved, as well as international cooperation with overseas regulatory bodies, said Louis Lay, California-based Brands Investment Partner, Director of Investments. This is the chart of Didi Global, and at the on the IPO day, the highest marked price was at $18. But after Beijing's crackdown on these Chinese firms which are listed overseas, the stock in an intraday basis fell 20%. This Didi Global is now wavering around $11.67 during recording this video. Now, the other thing which specifically we are going to talk about is about Jim Cramer. He's a CNBC journalist who he says that get as many DD shares as you can after the Chinese ride-hailing giant goes public. Jim Cramer says. CNBC's Jim Cramer recommended investors to get it on the initial public offering for China-based ride-hailing company Didi. If you want to speculate on Chinese IPO, you got my blessing to bet on Didi. I would try to get as many shares as you can, the Mad Money host said. The company is set to begin trading on public market in the US on Wednesday. This article was published on June 28th. But after the market frenzy and the Beijing crackdown, let's hear what Jim Cramer has to say. Didi Global shares took a major hit as China banned the ride-sharing app from mobile app stores in its home country. Earlier this morning, Jim Cramer took to Twitter saying that Didi's outrage might change some people's mind. Jim Cramer says that investors should stay away from Didi.